So we are gonna just review these things that are said by a lot of forex gurus and forex mentors. So a little disclaimer, guys. This is my point of view. Ne? This is my point of view. So you don't have to take this personal. So this is how I view things in terms of trading. So the first thing which is not really good that I've heard a lot of traders or so-called professional traders said is that you should trade one pair, ne? That you should trade one pair. So my question is, why should you trade one pair? And what they usually say is that so that you can master it and then go to another pair. So the simple thing is that if you are gonna trade one pair, then it means that you are gonna be seeking for a lot of opportunities in one pair, even if the market is not moving in a good way, but you will be forced to take decision. Why? Because you have to be trading and the only option you have is the one pair. So one pair, I don't think it's an option, guys. What will save you from taking trades that you're not supposed to take, it is actually having multiple pairs in your watch list, not actually having all the pairs, but having just a little bit of multiple pairs. And if you want to master a single pair, I'm telling you, it's gonna take you a lot of time, because if you're gonna say I'm specializing in one pair and I want to master it, it means that you have to know everything that is going on in the country. You need to know capital flows between those two currency pairs which make that pairs. You need to know the imports, the exports. You need to know what is going on, the investments, the portfolios, what is going on with everything in that particular country. So it means that you are going to spend a lot of time trying to do your research. So the conclusion of this is that you cannot come to the conclusion of mastering a pair. Why? Because a pair is not just moved only by price action, or which is caused by market psychology. So it is not moved by that, and it is also not moved by economic factors only. So there are a lot of driving factors behind the market. Even a market, for an example, let's say we're talking about USD CHF. Now, USD CHF, it doesn't mean that if you're going to analyze the USD and the CHF, then you're going to master that pair. What you should know is that even the GBP can cause a certain movement in USD CHF, because these pairs, they are related. So it's a bad thing. It's just one shortcut to becoming a losing trader. Just don't give yourself limited options. Give yourself multiple options so that you don't take decisions you are not supposed to take. So let's go back. Let's go to the second one. So the second one is, they said you should trade frequently. So now this second point is contradicting the first one, because they say you should specialize on one pair, and then all of a sudden they say for you to be successful you need to be trading frequently, which is something that is contradicting. If you are to trade frequently and you are given an option of one pair, then it doesn't make sense. It means that you will take trades that you're not supposed to take. So the best option that I can tell you, or the best advice I can give you, is that successful trading is not about trading frequently or taking a lot of trade. It's not about the quantity of trades, it's about the quality of the trades you take. One trader can take 6 trades in a week and be successful than a trader who is taking 28 pairs in a week. Because maybe this trader is having enough time to really analyze his trades before he takes them. He have a lot of confirmations that should be met before he takes his trades. But then this trader B, with 28 trades, maybe he is just randomly buying, selling, and there is nothing that is working out. So it's not about how many trades you take. If the market is not presenting opportunities to you, then don't take a trade. Don't force yourself to take 17 trades. Don't force yourself to take 19 trades. If the market is not presenting you good opportunities, then you don't want to take any trade. So wait until the market gives you an opportunity. So trading frequently is not just a way out. What you are looking for, it is high quality trades. The third thing that I always tell you is that use a chart like this. Use pure price action. They will always criticize indicators. That's the worst thing that I've heard. A lot of gurus and so-called mentors, they will always tell you that pure price action is the classical way. It is the way out of trading. But to tell you the truth is that a lot of things that we look when it comes to price action, there are already indicators created to simplify that thing. For an example, you have to spend your time trying to figure out the trend of the market. Yet, yes, it can be easy if you are a professional, but for beginners, it might be hard. So, but then the moving averages are created to just show you the direction with just a glimpse, just a look. You can see the direction. And also, one trader has to spend time trying to figure out a place where the price is oversold or where the price is overbought, and there are indicators created to just show you those stuff. Look how simple things are. And traders also should try by all means to figure out volume by looking at the price, looking at the candles, but there is an indicator for volume. So it's just a dumb advice that you shouldn't use indicators. So if you want something and there's an indicator created for it, then you gotta drop it in your chart. You gotta have that indicator in your chart because it is there to simplify your trading. It is there to make trading simple. So if price action is not working best when it comes to your own personal trading, then you have to consider indicators. So it's not a good advice to say pure price action is the way out. What if pure price action is not working for you? It's not a good thing for you. It's not a very, very good analytical approach for your mind or your psychology. Then you might require indicators. Maybe you understand indicators better. Maybe you understand a lot of data combined better than just looking at candles. So have to consider even that one. And then the fourth one, guys, they say it is possible to actually know the direction of the market, and this is one major cause of losses. If you can be at peace with the fact that you will never know where the market goes, where the market will go, then you'll be successful. Because the truth is, although we can see here and say gold is moving maybe in an uptrend, is about to go a little bit up, the truth is that we don't know. We are just assuming, we are just focusing, we are just predicting. So be at peace with the fact that you will never know the market direction, and that thing will help you to even manage your risk proper, to see risk management as a key thing. So we will never know the market direction. That's why you can draw your trend lines, all your indicators can be in place, and all of a sudden the market just surprises you, because we will never know where the market will go. So be at peace with that and just work on your risk management and risk reward. Those are things that are gonna save you. And then the last thing that I want to share with you is that they always say open multiple positions. Excuse me, you will see them buying here and buying, like clicking the buy button for like 10 times, and they say that's the way to profit, to proficiency. But the question is, what if the trade goes against you? Then it means that you are gonna lose 10 times. You are going to lose, meaning you are risking, you have increased your risk 10 times. So it's not a good thing. And they usually tell you this thing when they say when you see a good trade, just open a rough position. And you shouldn't favor trades against each other. There shouldn't be a good trade and a bad trade. If a trade is looking bad, you shouldn't take it at all. You shouldn't be taking it all. And if it looks good, you shouldn't be favoring it better than the other by pushing up your lot size and clicking that buy button for like 18 times. No, it doesn't work like that. That's not the way to success. So don't favor trades. Just take trades the same way you do with other random trades. So if you risk 1%, risk 1% in every trade, no matter how beautiful the setup is, because even if the setup is beautiful, it is bound not to work. It might happen that it might not work. So cheers, guys. Thank you for watching this video.